Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so today's topic is one of the most discussed, or I would say one of the most arguable topics among the traders. It might be a trader who is new to trading, or it might be an experienced trader. Everyone has their own perspectives when it comes to this particular topic. Okay, so in today's video, we are going to discuss about how can I trade a sideways market, or can a sideways market be traded? Well, let me also clear the fact here that a sideways or sidewise market is the same as a range bound market. Again, in this also you will get a lot of versions, but be reminded about the baseline. And the baseline is that we are talking about a market which is not moving up or which is not moving down. So practically and theoretically, it means only one thing, that the market is moving sideways or is range bound. Okay, we are talking about the market as a whole or a particular stock as well. Okay, so first thing first, please be reminded of the fact that here we are talking about intraday trading. The scope of this video is limited to intraday trading or day trading only. Okay, it's very important for me to have this mentioned because it will help us in trading the right stocks. Okay, most of the time you will hear people saying that how can you trade a sideways market? Okay, but when they say this thing, they forget the very basic thing, and the basic is, boss, we are into day trading, and in day trading you cannot and will not fall short of stocks in order to trade. Okay, now let me answer the question first as per my experience, or you can say as per my perspective. Okay, so according to me, the answer to this particular question is both yes and no. Now, when I say both yes and no, what I mean is I have the expertise to either trade a sideways market if I want, or choose not to trade it. Okay, it absolutely depends on me what decision I take in the live market. Okay, but since I'm making this video, it becomes very important for me to cover both these aspects. So that you guys can decide how would you like to take the trade for a particular stock when you are trading live. Okay, so let me break it up one after the other. Okay, when I say yes, I assume that the guy who is trading the sideways market is an experienced trader. Okay, who knows and have mastered the support resistance part at least. A guy who has a very good idea of reading and analyzing the direction of the market or the direction of the stock on that particular day. Okay, if you are this guy, then the answer for you is a yes. Okay, yes, you can trade a sideways market as well. Okay, now the next important thing that comes up is how. How do I trade it? Well, there are many ways, but let me talk about the two most important ways that I am aware about. Okay, now when the market is sideways or range bound, one way you can follow to trade a stock is to wait for a breakout if you want to go long, and you have to wait for a breakdown if you want to go short. Okay, another way to trade is you initiate a long position when you see that the stock is getting a support and cover your position when it reaches the resistance level. Similarly, you initiate a short position when you see that the stock is facing a resistance and cover up your position when it reaches the support levels. Simple, isn't it? Well, it's not that simple when you trade it in the live market. In the live market, everything just changes within seconds. Okay. Now, reasons are many. Like, firstly, people will not be able to identify when the stock or when the market has gone sideways or range bound. Okay. And secondly, even if they know, they will not be able to figure out a right entry and exit points. Okay. So, there are many reasons, and I mean, yeah, so there are many reasons, and it all depends on how a good observer you are. Okay, how closely can you observe things in the live market? How much time have you given to the market to learn and observe the things? Yeah. Now, this is what differentiates between a profitable trader and a trader who is on a losing streak. Okay, so let's get on to the chart. Okay, let's get on to the chart so that I can explain you both the points which I just discussed before some time. Okay, so we will stick to the Maruti chart. Okay, we will stick to the Maruti chart. This is a 15 minutes Maruti Suzuki India chart. And if you have seen my previous video, okay, I ended my video somewhere here at around 2:15 p.m. or 2:30 p.m. I believe. Okay, and before I ended the video, I had stated three things about Maruti's move. I had told that I don't see any restriction why Maruti should not be flying further. So my expectation or my anticipation was that Maruti will surely go up further. Okay, so that was my first anticipation. Second anticipation was I had mentioned that Maruti might end up sideways. Okay, and the third anticipation was if the lower yellow line is breached, then Maruti might fall as well. Okay, so talking about the first anticipation, I had told you that Maruti had gone sideways since 1 o'clock in the afternoon, right? Since 1 p.m., Maruti has been consolidating. It is the same as going sideways or sideways or going range bound. Okay, so clearly it was range bound or it was sideways since 1 o'clock, since 1 p.m. Okay, and here at around 2:15 or 2:30 p.m., I had mentioned it very clearly that if the upper yellow line is breached, then Maruti will fly up further. Okay, and out of the three conditions that I have mentioned, I had also clearly stated that Maruti moving up holds a more probability because the overall market is really, really bullish. Okay, and as you can see here, it moved up. This particular range was breached. There was a breakout which happened here uh, at the 2:45 p.m. candle, and Maruti moved right from 5190 till 5399. You can well imagine what kind of move it gave just within 20, 25 to 30 minutes. Okay, so that is the importance of identifying when the market or when a stock has gone sideways, and you draw the particular range bound ranges. So upper yellow line is one range, lower yellow line is another range. So both of them makes one set of range. Okay, so if the upper range is broken, we can expect the particular stock to move up, and if the lower range is broken, we can expect the stock to fall. Okay, but before you draw these two yellow lines, it is important for you to actually identify whether the stock has gone range bound or not, and that will come only when you get experience. That will come only when you spend a lot of time in analyzing the charts. Okay, so the more you analyze the charts, the more you get comfortable. Just by seeing things, you can very well anticipate what might happen. Okay, so that covers the first point. So the first point of what I mentioned, how you can trade a sideways market, is when a breakout happens you go long, and when a breakdown happens you go short. Okay, so what you can actually do here is you can place a stop loss buy order just above this yellow line. Okay, so that so let's say for example you have placed a stop loss buy order at 5208 or 5210. Okay, because you are anticipating that Maruti can go up. Okay, and as you all know, none of the what do I say, brokers, or none of the systems that the brokers follow, those systems do not take the future prices. So for example, if Maruti is trading at 5200, you cannot place a buy order at 5210. I hope everybody knows it. Okay, so if a particular stock is trading at 5200, we cannot place a buy order at 5210. Now 5210 is a future price, so the system will not take it. So in order to fake the system, in order to in order to make the system believe, we have to place a stop loss buy order. So that will be placed at 5210, and when the particular stock touches 5210, it will initiate a buy order. Okay, and after that, it depends when you book your profits and what stop loss you keep and all those stuffs. Okay, but those things are not in the scope of this video, so we will just talk about breakouts and breakdowns and stuff like that. Okay, so I hope this is clear. The first point, I hope that is clear. Okay, you have to identify when the market has gone sideways or when the stock has gone range bound, and then you place your orders accordingly. Okay, the second thing that I told you is, let me make it a bit taller. Okay, so the second thing what I told you is, post the stock goes range bound, you can initiate a short position somewhere here. Okay, now since the stock has gone range bound, so let's say for example you have waited 15 to 20 to 45 minutes. So let's say from 1 o'clock or from 1:15, uh, you are observing the market and it has been 2 o'clock, and you are seeing that since the last 1 hour, the particular stock has gone sideways. Okay, so you are anticipating that it will remain sideways for some more time as well. Okay, so what you will do is, whenever the stock approaches this resistance level, you will initiate a short position, and whenever it reaches the support level, you will book your profits. Okay, similarly, you will initiate a long position at this support level, and whenever the stock reaches this particular resistance level, you will book up you will book out your profits. Now this option is highly impractical when it comes to intraday trading. Okay, now remember, I was explaining the options using which you can trade. I am not emphasizing or I am not forcing you guys to take up that way of trading. Okay, so this was the second way of trading. And as I said, it is highly impossible or it is highly impractical to, take up such trades. Okay, especially when you are into day trading. So out of option one and option two, the better option is to wait for the breakout or the breakdown. Okay, so let's say, for example, as I said, you are anticipating Maruti to give you a breakup. Okay, to give you a breakout, which means that you are anticipating that if this upper yellow line is breached, then Maruti will fly. So what you do is, you place a stop loss buy order somewhere at 5210. Okay, but let's say, for example, if Maruti did not go up and it fell, it breached the lower yellow line and it breached the range in the downward direction and it fell. So y- nothing bad is happening to you, because this stop loss buy order will never get initiated. So you can cancel it. Okay, so you are not losing any money. So option one is a better option to trade when it comes to intraday trading. Okay, so as I said, in this chart, you clearly see that the stock has gone range bound, because of which it is not giving you a good move, okay, in any of the directions, and because of which you as an intraday trader is not able to trade it. Okay, so that was a point which I wanted to make. Okay, I hope that is clear. Now, another point that you need to have a note is, in order to know whether the stock is sideways or not, you need to wait for some time. Okay, I mean, in order to get a picture on the charts that a particular stock has gone sideways, it will obviously take some time, right? It might take 30 minutes, it might take 45 minutes, it might take an hour, it might take 2 hours as well. Okay, anything. But it will take time for the candles to get accumulated sidewise, and for you to know that the candles are indeed getting accumulated side by side, and by seeing that, you will conclude that the stock has gone sideways or is range bound now. Okay, so that is the point where the traders actually fail. They don't have that patience to, wait and see what the candlesticks are doing. Now, for example, on the charts here, I said that from 1 o'clock or from 1:15, the Maruti has gone sideways. But when did I make that statement? I made that statement at around 2:15 or around 2:30. That was like after 1.5 hours of the stock getting range bound, right? Because I see 5 to 6 candles are side by side, are placed side by side. That is when I realized that Maruti has gone sideways. That is when I stated that Maruti has gone sideways or Maruti has gone into a range bound mode, right? Now I cannot state the same thing at around 1:15 or 1:30, right? Because enough candles have not formed for me to decide whether it has gone range bound or not. I hope you are getting the point. Okay, so this is the point where most of the traders fail. They don't have the patience to wait and see what exactly the guy is doing. They will simply blindly go ahead, make a wild guess, and place a short position or initiate a long position with a stop loss, and they leave it all to the luck. That is not how we trade. That is not how a day trader should be behaving. Okay, so do not follow those things. Okay, so again, just to have a quick recap, the first and the foremost thing that you need to be aware about is whether the stock has gone range bound or not. That is your first job. Okay, and how do you have expertise in that? The more you see the candlesticks, the more you study the charts, the more you get comfortable in analyzing or in pointing out when a particular stock has gone range bound. Okay, I hope uh, that is clear now. Okay, so the discussion that we just did was on the yes perspective of trading the sideways market. Now let's talk about the no perspective. Okay, let's talk about the no perspective. So when I say no, we cannot trade a sideways market, I am playing safe here. I mean, trading is all about being on the safer side, right? To protect your capital, to minimize your losses, and all those stuffs, right? So if I'm saying a no, I'm not wrong. Now, why am I not wrong? I'm not wrong because I realize the fact that I am an intraday trader and that I am not restricted to trade on a particular stock. Okay, I have numerous stocks to trade on. I have more than 250 or 300 stocks to choose from. I mean, if I talk about all the FNO segment, I mean, if I talk about the FNO segment, the FNO segment has more than 250 to 300 plus stocks to trade on, right? So the point is, if I am seeing that a particular stock has gone sideways or range bound, why should I waste my time to wait and see whether it is giving a breakout or a breakdown? If I am a real trader, okay, if I'm a practical trader, I will move on, man. I will not wait. I will not sit and waste my time. I will start my hunt for another stock that is matching my technicals and that would that would be giving some nice upward or downward moves, okay, where you can trade them easily. Okay, it cannot be the case that all the 250 or 300 plus stocks are moving sideways simultaneously. It just cannot happen. Okay, so as a trader, it is your responsibility to find the right stocks to trade on such days. Okay, I hope the point is clear. Okay, that it makes sense. All right, so that is how you trade a sideways market, guys. Okay, there is always a way out to do something that you really want to do. Just that you need to be very patient and sharp. You need to be very sharp in your skills to find the right things on the right time and trade it in the right way. Okay, you should not be rushing through and doing things in a hurry by assuming things, because assumptions are the greatest enemy to a trader. You should always trade what you see on the charts and not what you assume in your thoughts. Okay, and if you ask me which is the option I select, then obviously I always follow the second option, wherein I don't waste my time in waiting for the stock to make a movement. Rather, I prefer searching a stock that is making some good moves and go with the flow. Okay, that is the way I always trade. Okay, irrespective of how bad the market is, irrespective of how sideways a particular market or a particular stock is, I can guarantee you that you will at least get 3 to 4 or 4 to 5 or 5 to 6 to 7 stocks which will give you some good moves. The only thing which you need to take care is you need to be fast enough in finding them. Okay, you find them, you hit it hard, and you take out your profits. As simple as that. Okay, so I hope this was helpful, guys. Okay, and always I would request you to like and subscribe to my YouTube channel, and also please do not miss the ending of this video, as you will get to know some more details about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely answer back to them. And also please do not forget to like this video if you liked it. Okay, so that's all from my end, guys, and I will see you all later. Hope you all will stick back. Happy trading. Stay back home. Bye bye.